All right, guys, welcome to Infinite Floating Stocks. I am Venkat, and today I'm gonna help you, or I'm gonna teach you an amazing strategy and an amazing intraday strategy. Okay, so the name of the strategy is MTFA strategy. Okay, so all right, don't get confused with the abbreviation. So it's very simple. When I say it as MTFA, it's nothing but multi time frame analysis. MTFA, which is multi time frame analysis strategy. Okay, it's very simple and it's very powerful. I repeat, this strategy is very simple and it's very powerful. Okay, so I have been using this strategy since very long, and recently we have been posting a 10 days Instagram challenge that we're gonna reveal the watch list and also we're gonna reveal entry and exit points. Okay, so I mean, this strategy helps you to trade on the same stock for a month, for really on a month. Okay, there are a lot many people who just waste their time by making a watch list or by selecting stocks for the next trading day. But what the most advantage thing about this strategy is, once you are done with, once you are good at this strategy, you can apply the strategy to any stock, any stock which is having a chart. Okay, so that you will definitely get an entry throughout a day. Okay, so that is why we have posted a 10 days challenge in Instagram by sticking to only six stocks all through the 10 days. And we have pointed out probable entries and exits for those six stocks for continuous 10 days. And we have won the battle. Okay. We have won the battle. Seriously, every day we got very good entries because we used multi-time frame analysis strategy, which is MTFA strategy, which is more powerful. Okay. And guys, when I say it is powerful, among all our strategies, this strategy takes second place when it compared. I mean, when it is categorized under a powerful strategies. Okay, the legendary price action strategy takes the first place, and multi time frame analysis strategy takes the second place when when they are categorized based on their powerfulness or their reactiveness or their success ratio when compared in a real market. Okay, so we are really amazed with the results of this strategy. So I would ask you all to pay utmost attention while listening to this session. Okay, so yes, let's not waste the time, and I'm going to explain you the strategy now in a very simple format. Okay, all right. So yes, these are all the contents for today's session. The first content is, what is MTFA? MTFA is nothing but multi-time frame analysis. Okay. And what does MTFA strategy include? I'll be explaining you about that. And I'll be explaining you about chart setup that you need to be, that you need to be adding few indicators, and you also need to be doing some analysis. So I'll be revealing all those things under chart setup for MTFA strategy. And yes, what is MTFA strategy? I'm also going to tell what is MTFA actually, what actually it is. Okay. And yes, I'm gonna backtest MTFA strategy with you guys today. You will be amazed. I promise that you will be amazed with the results. Okay. And yes, five confirmations you need to be looking for before making an entry using MTFA strategy. I'm also going to reveal the five secret confirmations that you need to be thinking, or that you need to be kept in the mind while making an entry using this strategy. And yes, entries, stop loss, and also I'll be letting you know the targets as well if you're using this strategy for intraday. Okay. And yeah, the most important thing, important things that you need to be keeping in the mind while trading this strategy. Okay. So these are the perfect contents for today's session. So guys, let's rock. Okay. All right. What is MTFA and what does MTFA strategy include? It's very simple. MTF is nothing but multi-time frame analysis. When I say multi-time frame analysis, it's very simple. See, to explain this, I should be going on to the charts. Okay. All right. Oh, this is Hindalco chart. Okay. I'm expecting that you guys are able to see my chart, and I'll be all right. This is what is MTFA. I already told MTFA is nothing but multi-time frame analysis. Okay. When I say multi-time frame analysis, it's nothing but you need to be getting onto the chart. Then you need to click on this time drop down. Okay. This is time drop down, time frame drop down. Actually, it's time frame drop down. If you click on this, you'll be able to find all the time frames. 1 minute, 2 minute, 3 minute, 4, 5, 10, 15, and 30 minute, 1 hour time frame, 2 hour time frame, 3 hour time frame, 1 day time frame, 1 week time frame, 1 month time frame. Okay, these are all the time frames that you will be find under time frame drop down. Okay, and if I click on 1 minute, that means each candle will be formed in 1 minute. If I click 5 minute, that means each candle will be of 5 minutes. The formation for each candle will take 5 minutes. Okay. If I click on 30 minutes, that means formation of each candle will take 30 minutes. Okay. That means each candle is of 30 minutes. When I go for 1 hour, that means each candle will be of 1 hour. I mean, formation of this candle will take 1 hour, and formation of this candle will take another 1 hour, and formation of this candle will take another 1 hour. Okay. So each candle tells you that it took 1 hour to form the candle. Okay. And when I click on 1 day, that means each candle is of 1 day time frame. I mean, the candle is taking 1 day to form. Okay. I mean, the market is represented for 1 day with one candle. Okay. And when I select 1 month, that means each candle will be of 1 month. Okay. So these are all the time frames that you need to be analyzing if you are using this strategy. Okay. So these are all the time frames, and you need to be analyzing all these time frames, and you need to be analyzing the chart in all these time frames. So we call it as multi-time frame analysis. I repeat, you need to be analyzing the chart in all these time frames. Okay. So we name the strategy as multi-time frame analysis strategy, which is MTFA strategy. All right. Now, what does MTFA strategy include? I'll be revealing all those things in the next slide. Okay. So yes, here comes the just simplified definition for multi-time frame analysis strategy, which is nothing but analyzing the chart in all the time frames can be called as multi-time frame analysis. I repeat, analyzing the chart in all the time frames can be called as multi-time frame analysis. It's as simple as that. But when I say analyze, I repeat, when I say analyze, that means you need to analyze the chart from higher time frame to lower time frame. Okay. And yes, let's get on to the chart. Now see, when I say analyze, that means you need to analyze the chart from higher time frame to lower time frame. So look at this. This is 1 month time frame, which is higher time frame. Okay. So you need to be coming from 1 month time frame. Then you need to be analyzing the market in 1 week time frame. Okay. Then you need to be analyzing the market in 1 day time frame. Then you need to be analyzing the market in 2 hour time frame. Then you need to be analyzing the market in 1 hour time frame, like that. Okay. You need to be going from higher time frame to lower time frame if you are doing multi-time frame analysis. I repeat, if you're doing multi-time frame analysis, you should be going from higher time frame to lower time frame. For example, you need to be analyzing the market in 1 month time frame first, then you need to be going to 1 week time frame, then you need to analyze the market. Then you need to go down to 1 day time frame and you need to analyze the market. Then you need to go down to hourly time frames and also followed by minutely time frames to analyze the market. So such type of analysis is called multi-time frame analysis, and you need to come from higher time frames to lower time frames while analyzing the market. This is very important. Okay. And yes, here comes the second point, which is need to analyze the market. Need to analyze the chart from higher time frame to lower time frame using different colors for different time frames. Here comes the most important point of this slide, which is nothing but you need to be analyzing the market from higher time frame to lower time frame, but you need to be using different colors for different time frames. This is very important. I'm going to reveal the advantage of using different colors for different time frames moving forward. Okay. Maybe in next 2, 3, 4 slides. Okay. So uh, just stay excited. Keep the excitement. Okay. I'll be revealing the advantage of this in later slides. Okay. And yes, When I say analysis, you need to be drawing all possible support, resistance, trend lines, and chart patterns in all the time frames to call it as a multi-time frame analysis. I repeat, when I say, I mean, the definition says that you need to be analyzing the market in all the time frames. Okay. So what people might be thinking of what type of analysis, what do we need to do with the charts? I mean, what do we need to do in different time frames? So that's the first question that should be striking onto your minds. Okay. So the answer is very simple. When I say analysis, that means you need to draw all possible support or resistance or trend lines or chart patterns in all the time frames to call it as multi-time frame analysis. That's it. When I say analysis, it means you just need to draw strong support or resistances, strong trend lines or strong chart patterns in every time frames. Okay. So that is called analysis. Okay. And yeah, you should not forget this point. You should be using different colors for different time frames while analyzing the market. Okay. And yeah, all right. Now look at the fourth point. Levels drawn in higher time frame are more stronger than levels drawn in lower time frame. I repeat, this is very, very, very important. Levels drawn in higher time frame are more stronger than levels drawn in lower time frame. Okay. Now see, for example, if I go to chart and select 1 month time frame, let me select. This is 1 month time frame, and imagine that I'm gonna draw this resistance here. Okay, or all right, let's draw. All right, okay, this resistance. This looks good because it acted as a resistance here, and also acted as a resistance here. So this level will be more stronger than if I go to 10 minute. All right, 10 minute. If I go to 10 minute and draw another, all right, let's go to 1 hour. Okay, yeah, let's go to 1 hour and I'll draw this level. Okay, this is a strong level because it is acting as a resistance here, acting as a support here, and also acting as a resistance here twice. Okay, so now see, I have drawn this bottom line in 1 hour time frame, but I have drawn these two lines in 1 month time frame. Now, these two lines will be more stronger. I mean, you can rely on these two lines. Okay. These two lines are more stronger than this line because these two lines are coming from higher time frame, which is 1 month time frame, but this line is coming from 1 hour time frame. Okay. So levels which are drawn in higher time frame are more stronger than levels which are drawn in lower time frames. That is very important, and levels drawn in higher time frame are more stronger than levels drawn in lower time frame. You need to remember this point. So, and yes, levels drawn with more touch points are more stronger than levels drawn with less touch points. When I say touch point, I already told you guys that you need minimum 2 touch points to draw support or resistance or chart patterns or trend lines. Okay, you need minimum 2 touch points. But if you draw with more number of touch points, the level will be more stronger. For example, imagine that you have drawn a support with 5 touch points. Okay, so that support will be more stronger than another support which is having only 2 touch points. I'll explain you this. Let's get on to the charts. I'm going to delete all these things. Let's go down to 10 minute. Okay, now see. Oh, this looks great. All right. Or else let's consider this zone. All right, this zone, this zone. Okay, now see, this zone is having more touch points. This is touch point 1, and this is touch point 2, and yes, touch point 3, touch point 4, and touch point 5, touch point 6. Okay, this level will be more stronger when compared to this level because this level is having only 1 and 2 and 3 and 4, only 4 touch points, but this level is having more than 4 touch points. Okay, for example, let's go down to this scenario. Let me delete all these things and let me draw a trend line here. Okay, this is a trend line. Okay, and all right, let me draw a resistance here. Okay, this is resistance. Okay, now see, this resistance is having how many touch points? This is touch point 1, this is touch point 2, and this is touch point 3. But when it comes to this trend line, I can extend this. Can I? Yes. Now having touch point 1, and I can consider this as touch point 2, this is touch point 3, this is touch point 4, this is touch point 5, and yes, touch point 6. So this line will be more stronger than this line because this line is having more touch points when compared to this line. Okay. So while drawing support and resistances and trend lines, you should be considering more number of touch points to make it more stronger. Okay. Stronger levels gives you good movements, good money. Okay. So yes, remember this point. When I say multi-time frame analysis, it's nothing but you need to be analyzing the market in all time frames, and you need to analyze the chart from higher time frame to lower time frame. Okay, from 1 month to you need to go down to 1 minute, and you need to use different colors for different time frames. Okay, and when I say analysis, that means you need to draw all possible support and resistances, trend lines, and chart patterns in all the time frames. Okay, and these 2 points are very important. Levels drawn in higher time frame are more stronger than levels drawn in lower time frame. For example, support which is drawn in monthly time frame will be more stronger than support which is drawn in 5 minute time frame. Okay, and here comes the next point. Levels drawn with more touch points are stronger than levels drawn with less touch point. Again, example, same example. uh, Imagine that you have drawn a support with 5 touch points, that will be more stronger than another support which we have drawn with 2 touch points. Okay, it's as simple as that. And you need to be drawing strong support and resistances levels, okay, while doing multi-time frame analysis. All right, what does multi-time frame analysis include? I already revealed it. It has support and resistances. It also has trend and trend lines, and yes, obviously chart patterns, and you need to look for candlestick patterns and volumes, of course. Okay, these are all the things that multi-time frame analysis includes. I'm expecting that you guys are very clear till now, so let's move forward. Chart setup, here comes the interesting topic. Okay, people might be thinking that what should be the chart setup for this strategy. Okay, no problem, I'm going to reveal that. So chart setup for multi-time frame analysis. All right, again, see, I have written the same points because those are very important. You need to analyze the market, you need to analyze the charts in all the time frames, that first thing. And you need to analyze the chart from higher time frame to lower time frame, which is also very important because levels drawn in higher time frame are more stronger than levels drawn in lower time frame. Okay, and yes, these are all the confirmations. You need to add VWAP from the studies. When I say VWAP, which is nothing but volume weighted average price. I repeat, VWAP is nothing but volume weighted average price. And you need to add VWAP from the studies if you are trading using MTFA strategy. Okay. To add that, just get onto the chart and click on studies, and in search box, just type VWAP. Okay. If you type VWAP, you will be able to see VWAP here. Just click on that. Then red color line will be populated on the screen. So that type of line is called, this red color line is called VWAP line. Okay. And yes, all right. That is how you need to add VWAP. Now add 35 SMA from studies. When I say 35 SMA, which is nothing but 35 simple moving average. SMA is simple moving average, and the period should be 35. To add that, you need to go onto the chart, click on studies, and type in moving average. Search for moving average, click on moving average, and enter the value as 35. Okay, and it should be simple, so I call it as SMA. Okay, simple moving average. Okay, and change the color to black. Click on done. If you do that, black line will be populated on the screen. Okay, this black line is nothing but like I told here the value is 35, which means this line will be formed, this black line will be formed by calculating previous 35 candles average price. I repeat, so black line is nothing but 35 moving average. Okay. When I say 35 moving average, it means this line will be formed by calculating previous 35 candles average price. And let me delete this red line. All right. Now you are able to see black line. So imagine that the length of black line from here to here will be formed by calculating previous 35 candles average price. That's it. It's as simple as that. For example, imagine that there are 35 candles from here to here. Then here to here, this black line will be formed by calculating previous 35 candles average price. Okay. So you need to add VWAP from the studies, and also you need to add 35 moving average from the studies. Now, all right, you need to add volume chart and also 10 EMA. When I say EMA, which is nothing but exponential moving average. So you need to add volume chart and 10 exponential moving average on the volume chart. Okay, to do that, again, click on studies. I'm going to delete all these things. I'm going to delete all these things. Okay, so this is my plain chart now. Okay, so to add volume chart, type for volume, VOLUMECHART. Okay, volume chart. Click on volume chart. So this bars, small bars will be populated at the bottom of the screen. Okay, so these are volume bars. And again, click on studies and search for moving average. Click on moving average. Value should be 10, because look at this line. You need to add 10 EMA. EMA is exponential moving average, and the value should be 10 on volume chart. Okay, so value should be 10 and field should be volume. Okay, field, go to field drop down, select volume. Okay, and change the type to exponential, because EMA, it's EMA, which is exponential moving average, and change the color to black. Click on done, so that you'll be able to see black line on the volumes bar, which is 10, I mean previous 10 candles average volumes. Okay, all right. So note, very important note, guys. So add all these indicators only after doing multi-time frame analysis. Now look at this chart. I haven't done any analysis till now. So if I go on adding all the indicators, for example, imagine that if I have added 35 moving average, changed the color to black, and then imagine that I have also added VWAP. Okay, VWAP. Okay, done. Now see, if I add these indicators, my chart will look ugly. Okay, so I cannot analyze the market in all these time frames. Like I told, strategy is MTFA. So you need to be analyzing the market in all the time frames. You need to be drawing support, resistance, trend lines, and chart patterns in all these time frames with using different colors. So if I add indicators first, then my chart will look ugly and I cannot analyze the market properly. So I don't add all these things now. I'll be adding only after doing multi-time frame analysis. Okay, so add all these indicators only after doing multi-time frame analysis, because these indicators can act as confirmations only. They can act as confirmations. We do not depend upon indicators. We take them as confirmations. Okay, so all right. Now, guys, I'll be backtesting multi-time frame analysis strategy. Okay, so to do this, let's get on to the charts. Now I'll properly explain what is multi-time frame analysis strategy in very simple words. Okay, so I have selected Hindalco for this, and as I said, I need to be analyzing the market in all the time frames, from higher time frame to lower time frame. So I go down to monthly time frame first. Okay, so this is monthly time frame Hindalco chart. It's getting generated. Let's wait for some time. All right, done. So I repeat, to do multi-time frame analysis, you need to be analyzing the market in all the time frames. So you need to be coming from higher time frame to lower time frame. Okay, that means you need to be coming from 1 month time frame to 1 minute time frame. Okay, and yes, when I say analysis, you need to be drawing support, resistance, trend lines, and chart patterns, all these things in all the time frames using different colors. Okay, so now we are in 1 month time frame. I'll be drawing support, resistance, trend lines, and chart patterns in 1 month time frame using different color. Okay, so I use pink color because my background is white. Pink will be very reflective, so I use pink now, and I will draw all possible support, resistance, trend lines, and chart patterns in 1 month time frame. Okay, now I mark the low. This is a low, and this is one key level. This is another key level. See, it acted as a support here, and it also acted as a support recently. And yes, this level, because it is acting as a resistance here and also acting as a resistance there. Okay, so yes, of course, this level, because this level is acting as a resistance once, resistance twice, resistance thrice. Okay, and of course this level, and of course this level. Okay, and all right, can I draw this level? Yes, I can draw this level because it is acting as a resistance here. It is acting as a all right support here. Look at this scenario. It is acting as a it took support and bounced it back towards upward. Okay, so I can draw that level as well. So this is what I can do in 1 month time frame. Let me see if I can draw any trend lines. Oh, this looks good trend line. Okay, took support, bounced it back. Took support, bounced it back. Took support, bounced it back. Okay, that's a great trend line. Let me draw another trend line here. Oh, amazing trend line. See, acted as a resistance, bounced it back. Acted as a resistance, bounced it back towards downward. Again, acted as a resistance and bounced it back towards downward. Okay, so any chart patterns? See, in 1 month time frame, I'm analyzing the market. That means I'm drawing support, resistance, and trend lines, and also chart patterns in 1 month time frame using pink color. Okay, I'll be revealing the advantage of pink color a little later. Okay, I can draw this level as well. This level seems good for me. Cause market took support here, bounced it back, and see it is also taking support here a lot many times. Okay, and acted as a resistance here as well. So I can draw that level. I should not ignore. This level also looks good for me. No problem. All right, this is what I can do in 1 month time frame. Now I'll go down to 1 week time frame, and now I'll draw all my levels. I'll draw all possible support, all possible resistances, all possible trend lines, and chart patterns in 1 week time frame. See, I'm doing multi time frame analysis. That means I'm coming from monthly time frame to weekly, weekly to daily, daily to hourly, and hourly to minute time frames. So I am done with monthly time frames. Now I have entered weekly time frame. Now I'll analyze the market here. That means I'll be drawing support, I'll be drawing resistances, I'll be drawing trend lines, and also I'll be drawing chart patterns in this time frame. Okay. So all right. And again, I have told that I need to be using different colors for different time frames. So I generally use pink color for monthly time frame and also for weekly time frame as well. Okay. I use same colors for monthly time frame and also for weekly time frames. Okay. So yes, let's draw all possible support and resistances now. Okay. All right, this level looks good for me. And all right, this level as well. Cause acted as a resistance here, also acted as a resistance there. That's it. No other new support or resistances. Don't worry, your chart will look ugly while drawing, but when you go down to 5 minute or 10 minute, it will give you more money. Okay. So the chart will be clean. As I promised, chart will be clean. Oh, look at this trend line. It looks amazing. Resistance trend line. Got kicked towards downward and also acted as a resistance, kick it down towards kick it towards downward, bounce it back towards downward again, and also bounce it back towards downward again. Recently, it also got respected. Okay, it also bounced back. This trend line has also acted as a resistance and stock price bounced back towards downward. Okay, so that's an amazing resistance trend line, and this is amazing support trend line. See, it's beautifully taking support on the trend line, bouncing back, taking support and bouncing back, and also taking support, bouncing back towards upward, and also took support here and also bounced back towards upward. So that's an amazing trend line. All right, this is what I can do in weekly time frame. I have drawn support and resistances and trend lines and also chart pattern. This chart pattern. Okay, so let's go down to 1 day time frame, and I change the color to blue. As I told, I need to be using different colors, so I'll be using blue color for 1 day time frame. Now in 1 day time frame, and I'll be analyzing the market. That means I'll be drawing support, resistance, trend lines, and chart patterns. I'll be drawing all those things in 1 day time frame now. Okay, so I select horizontal line and I draw this level because that looks very good for me, because it is acting as a resistance here a lot many times and acted as a support here 2 times and also acted as a support here thrice. Okay, so when I move forward, oh my god, let me undo. All right, now see, when I go down to current market scenario, it is acting also, it is also acting as a resistance here. Okay, so I'll draw a level there with blue color because I'm in 1 day time frame. Now I'll search for new trend lines and chart patterns and also support and resistances. Say I can draw this level here. Okay, I can draw this level because acting as a resistance here, acting as a resistance here, acting as a resistance here, acting as a support there, and also acting as a resistance there. Okay, all right. Oh, this trend line looks good for me. I'm gonna draw that. Amazing trend line. Okay, amazing trend line. Okay, so all right, I'm done with support and resistances, trend lines, and chart patterns in 1 day time frame. Okay. Wait. Can I draw this level? Not really. No problem. All right. I'm done with all the things. I mean, I have analyzed the market in 1 day time frame. Now I'll go down to 1 hour time frame. Okay. You can also analyze the market in 3 hours, 2 hours, and 1 hour. But I generally go from 1 day to 1 hour directly. Okay. If you do this, it will be like an advantage for you. But no problem. You'll get good levels in 1 hour time frame also if you miss out on 2 and 3 hours. Okay. Now look, I'm in 1 hour time frame. And yes, my color will be blue only because I use pink color for monthly and weekly time frames and blue color for daily and hourly time frames. If I'm analyzing the market in monthly and weekly time frames, I use pink color, which is only one color for these two time frames. And if I'm analyzing the market in 1 hour, 2 hour, 3 hour, and daily, I mean daily is something like 24 hours. Okay. So for all hourly time frames, I use blue color for these three hourly time frames, and for this daily time frame I use blue color, but for these two weekly time frames and monthly time frames I use pink color. Okay, so I'm still with blue color and I'm in 1 hour time frame. Now I'm gonna draw all possible support, resistances, trend lines, and chart patterns in 1 hour time frame. Okay, all right, this level looks good for me. Sorry, I chose the wrong drawing tool. All right, this level and also this level. Look, look, it is acting as a resistance. I mean, it is acting as a support here and also acting as a resistance there and also acting as a support here. So I can draw that level, no problem. Oh, I can also draw this level because acting as a support here a lot many times. And I can draw this level because it is acting as a support here and also acting as a support there as well. Okay. Now the important point comes here. See, our current market price is here. If you analyze the market at this area, which is so much far from, I mean, so much far from our current market price, that will be like, I mean, that cannot, I mean, that type of analysis can be called as bad analysis because our market price is here around this area, around, let me, yes, around this area. Okay, market price is here. So you need to be analyzing the market around your current market price to get good results. If you go down and analyze here, that won't give you good results because I can draw this level and I can also draw this level, but that won't help me because market cannot come from that level to this level in 1 day or 1 week. Okay, that's very huge movement. You cannot expect such huge movements. So you need to be analyzing the market close to your current market price. This is your current market price. So you need to be analyzing the market around this area only. Okay. So we are in 1 hour time frame and I choose blue color and I have drawn all possible support and resistances here. Okay. And also, yeah, I'll search for trend lines and chart patterns. I'll draw them if I find any, or else I won't. Look at this trend line. No, it's not a good trend line. I can delete. But, but, but this looks great for me. Oh, amazing. Okay. Good trend line. Looks like a good trend line. Okay. All right. And all right, this is also good. Looks like a good trend line. Cause see, market took support, bounced back, 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 finally broke, and also acting as a resistance here. Okay, so this is what I can do in 1 hour time frame. Guys, don't get confused. Your chart will be ugly while drawing, but when you go down to 5 or 10 minute time frame, it will be very clean. It will be helping you to make money. Okay, so strategy is very powerful. So while drawing, it will look like, I mean, it will look like messy and ugly, but that will give you money. Okay. So I'm done with 1 hour time frame. I'll go down to 30 minutes and I change the color to black. I repeat, when I say multi-time frame analysis, you need to be analyzing the market in all the time frames. Okay. While analyzing the market in all the time frames, you need to be using different colors for different time frames. Okay. So I use pink color for weekly and monthly time frames, and I use blue color for daily and hourly time frames, and I use black color for all minute time frames. For 30 minutes, for 15, 10, 5, and all these time frames, I use only black color. I use only blue color for hourly time frames and daily time frame. Okay. For weekly and monthly time frames, I use pink color. Okay. When I say analyzing the market, that means you need to draw all possible strong support or resistance level, trend lines, and also chart patterns. Okay. It's as simple as that. Now I'm in 30-minute time frame. So I'll be selecting horizontal line. I'll be drawing all possible support and resistances. This is good level because it is acting as a resistance there, acting as a support there, also acting as a support there. Okay. All right. I can also draw this level because it is acting as a resistance there, acting as a support here, acting as a support here. Finally, it is acting as a resistance there, acting as a resistance there. Okay. All right. Looks simple. All right. This is what I can do in 30 minutes. I can also draw this level because this level is acting as a resistance here and also acting as a resistance there. Okay. And another important, I think I can draw, not really, looks like miss. Let I can draw this level because it is acting as a support here and also acting as a support there and also acting as a resistance here. Okay. So this is what I can do in 30 minutes. Let me go down to 15 minutes. Okay. 15 minutes. We are in 15 minutes and I can draw this level in 15 minutes. Okay. Because it is acting as a resistance there, acting as a resistance there, acting as a resistance there. Okay. That's it. Let's go down to 10 minutes. Oh, let me look for chart patterns or trend lines. Not really, not finding any good ones. Oh no, that's a bad trend line. Okay. All right, that's it. Let's go down to 10 minutes and draw all possible support and resistance as chart patterns and trend lines. Okay. No, not able to find any new support and resistance levels or chart patterns because we have already drawn all support and resistances levels, all trend lines or chart patterns from higher time frames. So when you're coming from higher time frames, that makes your job easy when you come down to lower time frames. Okay. So see, I haven't to find many levels from 30 minutes because we have already plotted good levels in all higher time frames. So that higher time frames will come under lower time frames as well. Now see, we're in 10-minute time frame. Now I'm able to see blue lines and also pink lines. Okay. Now, yes, I'm going to reveal the secret behind usage of different colors for different time frames. Okay. Which is nothing but, now see, I'm in intraday time frame, which is 10-minute time frame. Now, if someone, imagine that you have drawn all these levels only using one color. Okay. Which means imagine that you have drawn all support, resistance, trend lines, and chart patterns in all time frames using only black color. Okay. Now see, this blue line will look like black for you because you're using only one color. This line is also look like a black color, and this pink line is also look like a black color for you if you're using black color. Okay. Now, and if you're analyzing the market, if you are at a key level, I mean, if you are at a pink level, if you are at a pink level or if you are at a blue level, uh, if you are using different colors, that will help you, right? For example, imagine this point. Imagine that the market is here. Okay. Now see, if this line looks like a black color, that means you won't be having any idea that whether this line is coming from which time frame. I repeat, if the market is around this blue line, okay, as we are using different colors, we easily find out that this line is coming from hourly time frame or daily time frame. Okay. Because the color is blue. If the line is pink, that means we can estimate that this line is coming from monthly time frame or weekly time frame. Okay. And now see, I already told you that levels which are drawn in higher time frame are more stronger than levels which are drawn in lower time frame. I repeat, I already told you that Levels. Levels are nothing but support and resistances, trend lines and chart patterns which are drawn in higher time frame are more stronger than levels which are drawn in lower time frames. Okay. Now in this scenario, this pink line will be more stronger than blue line because pink line is coming from higher time frame. I already told you that higher time frame lines are more stronger than lower time frame lines. So this pink line will be stronger than blue line and blue line will be stronger than black line. I repeat, monthly time frame is stronger than daily time frame and daily time frame is stronger than hourly, minute time frames. Okay. So this pink line will be more stronger than blue line and blue line will be more stronger than black line. Okay. Now see, if you use same color for all the time frames, you won't be having an idea from where the line, from which time frame the line is coming from. I repeat, if you use same color for all the time frames, you won't be having an idea from which time frame which line is coming from. Okay. Now see, if this line is a blue color, you can depend on that, saying that this blue color line means it is coming from daily or hourly time frame, which means that will be stronger when compared to minute time frames. This line is stronger. So once the rejection happens from the stronger line, okay, look at the move. You can make buy position here immediately after the rejection. All these are your profits. Okay. So that's the advantage of using different colors for different time frames. Okay. As I repeat, levels which are drawn in lower time frames. Very sorry. Levels which are drawn in higher time frame are more stronger than levels which are drawn in lower time frames. So we use different colors for different time frames. In my scenario, higher time frames, which are nothing but 1 month and 1 week time frames, will be more stronger than hourly time frames, and hourly time frames are more stronger than minute time frames. In my scenario, pink line will be more stronger than blue line, and blue line will be more stronger than black line. Okay, because I have used pink line for monthly and weekly, and blue line for daily and hourly, and black line for all minute time frames. Okay. Now, if you use same color, you won't be having an idea from which time frame the line is coming from. Okay, so you cannot identify the strength of that zone. You cannot identify the strength of the line, or you cannot identify the strength of the zone. Okay, so now see, if it's getting rejected by a blue line, that means it is getting rejected by a strong key level. Okay, if it's getting rejected by a strong key level, you should blindly make an entry there. That boosts your confidence. Okay, so here you'll be entering, and look, all these are your profits. Okay, and again see, now look at this junction. Look at this junction here. Oh, I'm so sorry. All right, look at this junction. Here the market is getting rejected by two time frames, which is nothing but it is getting rejected by blue line, and also it is getting rejected by pink line, which is nothing but this is the strong zone, and the price is getting rejected here. So you can make buy position here once the rejection is done, and all these are your profits. Okay, now see, uh, again look at this pink line. Market is getting rejected by a pink line, so you can make buy position here. All these are your profits. So your entry should be after the rejection, and your target should be next possible nearest support and resistance level. Okay, this is nearest support and resistance level, so you should be entering there with SL below, and target is determined. So if you do multi time frame analysis, your entries, your targets, your stop loss, all will be on the chart only. Okay, it looks very simple. Now look at this scenario. This is pink line. Okay, pink line is very stronger. Now see, market fell down badly. Now, when it came to pink level, which is a stronger line, market not able to break the strong line here. So it started accumulating here. Okay. Once the accumulation is done, you can make buy entry there because it got rejected by a higher time frame line, higher time frame zone. You can make buy entry there, and all these are your profits. This line should be your target, and your SL should be below the key level. Okay. Now let's search for another lines. All right. Oh, Oh, look at this blue zone. This is blue line. Okay. Now at the opening of the market, you can see this candle. This is hammer candlestick pattern, which is nothing but a bullish signal. Okay. Now see, the market is getting rejected by a key level, which is nothing but blue line. Blue line is stronger. So market is getting rejected by a key level. And with this candlestick pattern, you will get an additional confirmation saying that Market gonna be bullish because it is getting rejected by a key level, and this candlestick pattern is bullish candlestick pattern, which is hammer, and you can make buy entry there, and all these are your profits. And your target should be nearest or next possible support and resistance level, and your stop loss should be below the key level. Okay. Now again, look at this scenario. Here the market opened, and this blue line is a key level. So market not able to sustain over the key level, so it got rejected badly. Okay, it's coming down. So when it's coming down, you can be alert and estimate that market is getting rejected by a key level, which is blue line. So you can immediately make position there. You can go short here. All these are your profits. Okay. Now see, this should be your target because this is your nearest support and resistance zone. Okay. So you should be entering there, and all these are your profits. And this should be your, this should be your target zone, which because this is the nearest support and resistance level or trend line, and your stop loss should be above the key level. This is your entry, and this should be your stop loss, and all these are your profits, and this level should be your target. Okay. Now again, let's go down to some other examples. All right. Now see, you can also do this with black lines as well. Okay. When I say pink color is more stronger than blue line and blue line is more stronger than black line, that means I'm not saying that you should not trade on black lines. You can also trade on black lines as well. They are also, black lines are also, the minute time frame levels also gives you good levels. Good points. Let's consider this scenario. Okay. Now, yes, look at this blue level, which means strong level. The market broke the key level and it's coming downward, right? Okay. Now, now immediately after the rejection is done, you can make sell position there, and all these are your profits. Okay. So you'll be entering there. Your stop loss should be above key level, and yes, this should be your target. This so this your stop loss should be above key level. That is, your stop loss should be here, and your entry should be there after the rejection, and all these are your profits, and your target should be next possible or nearest support and resistance level. Okay. Or you can wait because there is a black line here, right? So you can wait for the market to break that level also, or you can enter there and putting stop loss there, and all these are your profits. You can also do that. Okay. So let's go down. All right, let's come to this scenario. Okay, this is black line. Okay. Now see, market getting rejected by a key level here. Market coming down and accumulated over the black zone and got rejected badly. Okay, so you'll be making entry there. You should be putting stop loss there above the key level. Your entry should be here. All these are your profits. Oh, your target achieved. Like I told, your target should be next or nearest support and resistance level, which is nothing but this should be your target. This should be your entry, and above the key level should be your stop loss, and all these are your profits. You're done for the day. I'll explain with another example. See, all right, this is blue level, which is nothing but a key level. Okay. Now see, market breakout of it. It is coming out of a key level. Okay. So I'll immediately make buy position. Once the breakout happened, I'll put my stop loss below the key level, and all these are my profits. And yes, guess the target. It's easy. Next support and resistance level should be your target, which is nothing but this is your target, and your target achieved. See, I have been explaining this since so many times. I have been explaining this since past 10 or 15 minutes, and in every time my target got achieved here. Okay, so that's how the strategy works. Look at this scenario, black level. Okay. Now see, market opened here, not able to sustain there, it came down. Okay. And again try to move up, and it also got rejected there. Okay. Now you can make sell entry there because this is your key level, and it got rejected by the key level. So you should be placing stop loss above the key level and should be making entry here, and all these are your profits. Where is your target? This is your target because this is your next or nearest support or resistance level. Okay. Now, amazing. Look at this market. This is black level. Okay. So market is getting rejected by the black level here. Okay. So once the rejection happened, you should be making an entry here by putting your stop loss below the key level. So this will be your stop loss, and this will be your entry. All these are your profits. What should be your target? Simple. this black line should be your target because this is nearest support and resistance level after your once the entry is done. Okay. Now, oh, I can explain this 1,000 times because I have been depending on this strategy since very long and I have made good money out of it. Look at this scenario. All right. Here, here is the junction. Okay. Market got opened here and it broke black level as well. It also broke blue level as well. Okay. Now look at this candlestick pattern. It's like inverted hammer, which indicates the bearishness of the market. Okay, because it's at key level and more number of sellers came, so this candlestick pattern formed. Okay, now I'm gonna make an entry there. I'm gonna short sell here. Okay, by putting stop loss above the key level, I'll be entering there, and my first target is this level because this is nearest or next possible support and resistance level. So this is my first target achieved. My second target achieved. My third target achieved. Okay, so that's how simple it is. You only need to wait for breakout or rejection from the key level, then you need to make an entry, and your stop loss should be, if you're making long position or if you're making buy position, your stop loss should be below the key level. If you're making short position, nothing but if you're selling first, then your stop loss should be above the key level. Okay, and target is very simple. Target is nearest or next possible support or resistance levels. Okay. Oh, amazing move. Look at this market. So this black line, which is nothing but a key level, and market is coming down and started respecting the key level. Okay. Finally, it got accumulated here and back to back green candles. Okay. So you can make an entry there. Your entry should be there. Your stop loss should be below the key level. All these are your profits. And this should be your first target because this is where, I mean, this is next possible support and resistance level after your entry. So this will be your target, this will be your entry, and this will be your stop loss. Okay, and I'll explain you a few more times to get confidence on the strategy. Okay. Oh, amazing. Look, market got opened here and we have a key level here at the bottom. Okay, so market got bounced back by, I mean, it took support and bouncing back. Okay, so you can make buy entry there immediately at higher high formation. Okay, you can make an entry there by putting stop loss below the key level. And what should be your support, I mean target? This level. Okay, this should be your target. All right, you are in profits. All these are your profits. Okay, your target got hit here. Okay, now, all right, let's search for another thing. Look at this scenario. Oh, what a market. Market got opened here and look, it's very volatile here. So if you are seeing very big candles, you should not be trading around that area. Okay, wait for the market to calm down. So this is where the market calmed down. Okay, because back to back candles, I mean side by side, which is nothing but market is in consolidation phase. Once the consolidation phase is done, you wait for a higher high formation. So you'll be making an entry there because it got rejected by black line, which got rejected by a key level here. So you need to be making entry there, and your stop loss should be here, and all these are your profits. What should be your target? Let's zoom out. All right, this level should be your target. God, it reached your target. I'm so happy. Amazing. Look at this day. Look at this day. See, this is where the market opened. It trying to go down, but here we are having a pink line. I already told pink line is coming from monthly or weekly time frame. Okay, that means pink line is more stronger. If the rejection happens from that zone, you need to blindly make sell position. Okay, now see market. I mean, candles are forming back to back. I mean side by side, which is nothing but market is in consolidation phase. Okay, it's trying to break this level and move up, but as I told, this level is coming from higher time frame, which is more stronger. So it is difficult for buyers or sellers to break the level. Okay, so it will get accumulated at such levels. Once the accumulation is done, you need to wait for back-to-back red candles and you need to make an entry at lower low position. Okay, so you need to enter there. Your stop loss should be there, and your target, simple. Zoom out. So this is next possible support and resistance level. So all these are your profits. Okay, so I'm expecting that you guys are very happy and amazed with the results of MTFA strategy. Okay, so it's very simple. you need to be analyzing the market in all the time frames. You need to be analyzing the market from higher time frame to lower time frame. You need to be using different colors for different time frames, and you need to be drawing only strong support, resistance, trend lines, and chart patterns in all the time frames. Okay. Now, advantage of color is nothing but if you're in a lower time frame and if you see black, or I mean not black, if you see pink or blue line, that helps you that that line is coming from higher time frame. So I already told you levels which are drawn in higher time frame will be more stronger than levels which are drawn in lower time frame. Okay. So if you use only one color, that won't help you. I mean, that won't give you any guess or clue about from which time frame the level is coming from which time frame the zone is coming from. Okay. So it's mandatory to use different colors for different time frames. Now look at this scenario. Oh my God, I'm tired explaining this because because I have explained it a lot many times, and in every scenario our target got achieved. Okay. Now look at this scenario. Pink line, which is a strong line. Market got opened there and it directly got rejected badly. Okay. So you can make sell position there. What should be your target? Next possible support and resistance. Your target got achieved. Done for the day. Oh my God, look at this scenario. Market opened here and back to back huge green candles and this pink level. Okay. Buyers became more stronger and they broke higher time frame level. Okay. When they broke, that means you need to make an entry there, right? So you need to be making an entry there, putting your SL here, and your target should be next possible support and resistance level, which is this level. See how beautifully the market respected our levels. All right. So you need to be entering at this point, you need to be putting your stop loss at this point, and all these are your target. I mean, all these are your profits, and your target should be next possible support or resistance level. Okay. Now again, okay, look, it broke the black line, so you need to be making an entry there. Your stop loss should be at the bottom of the, I mean below the key level, and your target pink line achieved. Okay. Now see, this is a level and it's getting rejected by the level, so you need to be making an entry there. Your stop loss should be above the key level, and all these are your profits. Your target should be next possible support and resistance level. Okay. So this is your target one achieved, this is your target two achieved. Okay. I can explain you this 1,000 times. Now look at this scenario. How beautiful the market is respecting our levels. See, market opened here, took support here, and trying to bounce back. Okay, so you can expect that the market is accumulating and trying to bounce back. So you need to make buy position there, and you need to put your stop loss below the key level, and all this is your profits and your target. What should be your target? Your target should be next possible or nearest support and resistance level. Okay, your target got achieved. You're done for the day. Okay, and yeah, look. Every day you can find opportunities every day. Now see, the market is getting accumulated there. Okay, and finally the accumulation is done. Okay, it broke the pattern. This is the pattern. Okay, this is the pattern, flag pattern. Okay, it broke the pattern, and yes, you need to be entering at this lower low, back to back red candles, and stop loss should be here, entry should be here. All these are your profits. What should be your target? Your target should be next possible support and resistance, which is nothing but this level. So here, this should be your entry, this should be your stop loss, all these are your profits, and this should be your target because this is the nearest possible resistance, support or resistance level. Okay, and look at this scenario. Market got opened here and trying to accumulate here. Okay, once the accumulation is done, if it's not going to break upside, if it's not going to break upside, and if it's trying to come down, wait for two back-to-back red candles. You need to make an entry at lower low and putting your stop loss above the key level, and all this are your profits. Leave for your profits. See, your target got achieved here. Okay, this is target because this is your next possible or nearest support or resistance level. Okay. All right, I'm expecting that you guys are very clear with the concept, very clear with the strategy. Okay. All right. Backtesting MTFA strategy. It's done. Okay. And 5 confirmations you need to look for before making an entry using MTFA strategy. Okay. You need to look for 5 confirmations. These are very important. The first confirmation is look for a breakout or look for a reaction from the key level. I have been shouting out so many times. that you need to be looking for a breakout or you need to be looking from a rejection from the key level. Okay, that's the first confirmation because that's very important. Okay, and the second confirmation is higher high formation or low low formation in 10-minute time frame. I'm so sorry guys, I forgot to tell this. You need to be strictly in 10-minute time frame, or you can be in 5-minute as well, but not in any other time frames. If you're trading using this strategy, you need to be strictly sticking to 10-minute time frame, or you need to be in 5-minute time frame. I mostly use 10-minute time frame because it gave me good results. Okay, so you need to be, if you're using MTFA strategy for intraday, you should be in 10-minute time frame. Okay, all right. So and yeah, I'll explain the first confirmation. Look for a breakout or look for a rejection from the key level. When I say rejection or breakout, see, this is breakout. This is the level, right? So finally it broke the level and coming out. It broke the level and coming out. So you need to look for this type of breakouts. When I say rejection, look at this scenario. Look at this scenario. Market trying to go up, but got rejected and bounced back towards downward. So this type of is called a rejection. So you need to be looking for rejections, or you need to be looking for a breakouts to make an entry. Okay, now see, this is a rejection, took support, bounced back. Okay, and again this is a rejection, got rejected, bounced back. Okay, okay, so all right, this is like a breakout because no bouncing back here. It directly broke this level and also broke this level. Okay, so you need to be waiting for breakouts or rejections. So second confirmation is higher high formation or low low formation in 10-minute time frame after breakout or rejection from the key level. When I say higher high formation, that means, let's consider this scenario. Let's consider this market. Okay, when I say lower low, now see, market is accumulating here and finally it broke the level. So this candle is called breakout candle because this candle broke the level, and this second candle is called confirmation candle. I repeat, this is the key level and the market broke the key level with this candle. So this candle is called breakout candle, and this candle, second candle, is called confirmation candle. Okay, when I say lower low formation, that means this breakout candle's low. Okay, here this breakout candle's low should be broken by confirmation candle. Okay, now see, this is breakout candle's low. Okay, this breakout candle low should be broken by confirmation candle. So you should be entering at this point, at exactly this point. Okay, at the lower low formation if you're going short. Okay, so that is lower low formation, and colors of both the candle should be red color if you're making sell position. If you're making buy position, color should be back to back green color. Okay, look at this scenario. This is a rejection, and here back to back green candles, and this is higher high formation. Okay, this is a rejection candle, and the rejection candles high should be broken by confirmation candle. Okay, so, and yes, lower low, I'll show you lower low here as well. So this is breakout candle, this is confirmation candle. Okay, now see, breakout candles low here, breakout candles low is broken by confirmation candle, so you should be making an entry at this position. Okay, so that is lower low formation. All right, so look for a breakout or look for a reaction from the key level, and higher high formation and lower low formation in 10-minute time frame, which is very important after breakout or rejection from the key level. And both the breakout candle, I already told what is breakout candle, and confirmation candle is next candle after breakout candle, should be of same color. I repeat, confirmation candle and breakout candle should be of same color. Now see, here confirmation candle and breakout candle are of, I mean, breakout candle and confirmation candles are of same color because they are red color. So if you're going, I mean, see, if you're going long position, right, this is a good example for going long. See, uh, this is breakout candle, this is confirmation candle, because see, this is second candle. So this is confirmation candle, this is breakout candle. Now see, high of breakouts candle should be broken by confirmation candle, so you should be entering at this point, and colors of the candle should be of same color. If you're going long, if you're making buy position, colors should be two back to back green candle. But if you're going short, look at this scenario. If you're going short, if you're gonna sell first and buy later, this is breakout candle, this is confirmation candle, this is lower low formation, and you need to be entering there, and you need to have two back-to-back red candles. That means breakout candle and confirmation candle should be of same color by forming lower low or higher high. Okay, and take confirmation from VWAP and also take confirmation from 35 moving average. Now let's get on the chart. Now see, I have analyzed the market, right? I already told you need to be adding indicators only after analyzing the market. So I have analyzed the market. Now I'll add indicators. I'll add VWAP from studies. I have added VWAP. Now I'll type in moving average and I will add moving average 35. Moving average value should be 35 and color should be black. Done. So I'm able to see these lines. Now see, if you're making a buy position, look at this scenario. If you're making a buy position, you need to have back-to-back green candles and rejection from a, and you need to have back-to-back green candles at the breakout and at the confirmation candle, and higher high or lower low formation should be formed. And yes, if you're making long position, the candle should be above these two lines, above VWAP and above 35 moving average. If you want to make a buy position, you need to take confirmation from these two indicators. Okay, now see, look at this scenario. All right, look at this scenario. Look at this scenario. Here the market took support and bouncing back, but no back-to-back green candles here, no back-to-back green candles here. So back-to-back green candles are here. So this is higher high formation. Okay, so you need to be entering at that point because back-to-back green candles and higher high formation and got rejected by a key level. Okay, now see, before making an entry, you need to look for VWAP and also you need to look for 35 moving average. If you're making buy position, your current market price or your candle should be above 35 moving average and above VWAP. Okay, if you are making short position, I mean, look at this scenario. Look at this scenario. Here you have back-to-back red candles. Here you have back-to-back red candles. Okay, this is breakout candle, this is confirmation candle, and this is lower low. And here you, I mean, the VWAP is asking you to sell because candles are below VWAP. The main ideology is if the market prices or if the candles are below moving averages, below moving average and VWAP, you need to stay on sell side only. Okay. For example, if you look at this scenario, look at this scenario. Yes, look at this scenario. This is breakout candle. This is confirmation candle. This is lower low formation. Okay. This is lower low formation. You need to be entering there because the first confirmation is done, getting rejected by key level. Second confirmation is also done, back to back red candles, and this is lower low formation. And third confirmation is if you are going short, the candles or current market price should be below VWAP. And fourth confirmation is the candle should be below 35 moving average as well. Okay, so you can comfortably make an entry there, and all these are your profits. And next support and resistance should be your target. Okay, if you're making long position, you also need to get confirmation from VWAP and 35 moving average. That means candle should be above 35 moving average and above VWAP. Oh, yeah, this is a perfect example for going long. Okay, now see, this is going long. Market got rejected here badly, and I look for higher high formation. Yes, this is higher high formation. Okay, now see, back to back green candles. Okay, this is, I mean, high of this candle is broken by this candle, and I'll be entering there because first confirmation is got rejected by key level, second confirmation is higher high formation and colors of both the candles are same, and third confirmation is my candles, and I mean my current market price is above VWAP and also above 35 moving average. So I'll make an entry there, and all these are my profits. Next support and resistance should be my target. Okay, that's how you should be trading. Okay, look at this scenario. Now, oh, it's a mess here. I'm gonna delete all these things. All right, now see, this is blue level, key level. First confirmation is breakout or rejection from the key level, done. Second confirmation is lower low formation, back to back red candles, done, because this is breakout candle, because this is rejection candle, and this is lower low formation, and colors of same candles is green, sorry, red. So first confirmation is break or rejection from the key level, done. Second confirmation is lower low formation and back to back red candles, colors of the same candles are same. Okay, that is also done. And third confirmation is VWAP. Current market price is below VWAP, so it's asking you to go for a sell. So third confirmation done. And fourth confirmation is 35 moving average. But 35 moving average is not cooperating. Okay. So you're missing out on a confirmation here. In this type of scenarios, you need to enter with less number of quantities. For example, you have a capacity of entering with 100 quantities. In this type of scenarios, if you are not getting a confirmation from moving average, you need to enter with 60 or 50 quantities. Okay, you need to reduce your, you need to size down your positions if you're not getting confirmation. Okay, so it's that simple. And take confirmation from volume chart and 10 moving average from the volume chart. So that's very important. Now see, let's go for a perfect scenario. All right, this is a perfect scenario. Okay, now see, look at this scenario. All right, so this is a key level. So rejection from the key level. First confirmation done. Second confirmation, lower low formation, back to back red candles done. Second confirmation is done. Third confirmation, it's below, I mean candles are below VWAP, so I need to go for a sell position. So third confirmation done. And fourth confirmation, candles are below 35 moving average as well. Okay, so 35 moving average is also asking me to go for a sell. So I have got 4 confirmations. And the fifth confirmation is you need to look for a volumes for breakout candle and confirmation candle. Okay, volumes are nothing but just go down to the bottom of the chart and look for volumes. If you're seeing a red bar, that means more number of sellers are coming to the market. If you see a green bar at the bottom of the chart, that means more number of buyers are coming to the market. Okay, at this breakout, you need to check the height of volumes, height of volume bar. That height should be close to or more than black line, which is nothing but 10 moving average on the volume chart. I repeat, these volumes are nothing but more number of sellers are coming onto the market. If more numbers of sellers are coming, color will be red. If more number of buyers are coming, then color will be green. And at the breakout, you need to check for confirmation candle and the breakout candle that the bars, the volume bars should be touching or they are close or they need to be more than 10 moving average on the volume chart. That means the bars should be close to or more than black line on the volume chart. Okay, so these are the 5 confirmations. I repeat it for the final time. Let's consider one example and move forward. All right, I'm going to delete all this to explain. Look, this is a key level. So breakout from a key level is happened. Okay, so I'll wait for first confirmation done because breakout from a key level happened. Now second confirmation is lower low formation. This is lower low formation. Okay, because 2 back-to-back red candles, colors of the candles are same, and this is the low of breakout candle is broken by or breached by confirmation candle. So second confirmation is done. And third confirmation is VWAP. All right, done. It's below. Fourth confirmation is 35 moving average. It is also asking me to sell. So I'm done. 4 confirmations. And yes, I'm not getting confirmation from volumes. Okay. Volumes are far from black line. So I can enter, but not with 100 quantities. I should size down my positions. If I have a capacity of entering with 100 quantities, I should be dealing with only 50 or 60 quantities because I'm missing out on a volume confirmation. If you're getting confirmation, if you're getting all 5 confirmations, you need to go with all your quantities. Let's search for that thing. Let's search for that example. Okay. Oh, all right. Let's search for that example. Okay. Uh, 5 confirmations around this area. Okay. Yes. Now see. First confirmation, breakout from a key level, which is pink line. Second confirmation, higher high formation. Colors of both the candles are green color, and high of breakout candle is broken by confirmation candle. So first confirmation done, second confirmation done. Third confirmation, candles are above VWAP, so it's asking us to go for buy. Fourth confirmation, candles are above 35 moving average. That means it is also asking us to go for a buy. And fifth confirmation is volumes. Look at the volumes, volume bars. Volume bars are saying that more number of buyers are coming to the market because volume bars are more and they are crossing 10 moving average on the volume chart. That means more number of buyers are coming. So we have got 5 confirmation here. So you can enter with 100 quantities here. Look, you should be entering there. Your SL should be below the key level and your target. This should be your target, nearest support and resistance level. Okay. So that's how you should be trading. All right. So entry, stop loss, and target for MTFA strategy. You already know this. I already explained it lot many times on the charts while backtesting. Okay. So entry should be made immediately after breakout or reversal. Okay. And wait for higher high formation or low low formation. This is very important. After breakout or rejection from the key level in 10-minute time frame. Okay. And breakout candle and confirmation candle should be of same color. Okay. Remember. And take confirmation from volume and 10 moving average on the volume. Okay. Which is our fifth confirmation. And also take confirmation from VWAP. Okay. And also take confirmation from 35 moving average. If the candles are above VWAP and above 35 moving average, that means you should be on a buy side. If the candles are below 35 moving average and also candles are below VWAP, that means you should be on a sell side. You should not go against the trend. Okay. So you should be on a sell side if your current market price is below these two indicators. If the current market price or candles are above these two indicators, that means you should be on a buy side. Okay. So, and also look for candlestick patterns. This is very important. And use these indicators as confirmations before making an entry. Okay. You need to use them as indicator, as confirmations. You should not only depend on indicators. Okay. Stop loss. You already know where to put stop loss. Stop loss should be placed below the key level or uh, below the breakout candles low. Okay, I have already shown you a lot many times while backtesting. If you're going long, if you're making buy position, stop loss should be below the key level. If you're going short, if you are shorting, I mean, if you are selling first and buying back later, then your stop loss should be above the key level. Okay, and stop loss helps us to reduce losses if the market goes against us. Okay, and do not enter a trade without stop loss. I repeat, do not enter a trade without a stop loss. Okay. It means you are going to a war without weapons. Okay. So you'll get killed at any time if you go to war without weapons. It's similar to trading also. If you go to trade, if you make your positions without a stop loss, if the market reverses back, you'll be killed there. I mean, you'll be facing huge losses. Okay. So you should not go to war without weapons. Similarly, you should not go to trade. You should not trade without stop loss. It's mandatory to put stop loss, which reduces our losses if the market is going in our opposite direction. Okay. And always trail your stop loss. Okay. Target. You already know what should be the target. Okay. Target should be next possible support and resistance level. It's very easy if you're doing with the MTFA strategy. And always trail your stop loss. Trailing stop loss is nothing but if the market is moving in your direction, you should be editing your stop loss and you should be bringing up towards upward if you're in a buy position. Okay. So, and start booking partial profits at first target. For example, if you're entering with 100 quantities and 70 quantities should be booked at first target only. Okay. So that is called partial booking. You know, first target will be your nearest support and resistance level, and second target will be and the next second nearest possible support or resistance level. Okay. At first target, once you're at first target, out of 100 quantities or out of 100% quantities, you need to book 70% of your quantities. For example, if you're entering with 1000 quantities, 700 quantities should be booked at first target. Okay. And leave remaining 30% of quantities to second target. Okay. And these are all the important points you need to keep in the mind while trading with MTFA strategy. Okay. Among them, time frame should be strictly 5 or 10 minutes, and do not have a do sorry do have a look at the size of the candle when it's near support and resistance level or trend line or chart patterns. Okay, I already told you, if the size of the candle is very huge, do not take the trade. Okay, and always do multi time frame analysis. Go from higher time frame to lower time frame. Okay, and you need to be using different colors for different time frames, which is very important because that helps you to, when you're in a lower time frame, if you're doing an intraday, that color will help you from which time frame the line is coming from. And if the color is pink or black, I mean pink or blue, that tells you that is a strong line because it's coming from higher time frame. If you use same color for all the time frames, you won't get that edge. Okay. And levels drawn in higher time frame are more stronger than levels drawn in lower time frame. This is very important. That is why I tell pink level is more stronger than blue level, and blue level is more stronger than black level. Okay. And always have a look at volume chart, and yeah, volume should be close to or more than a moving average. Okay, 10 moving average. And stick to targets. Targets are very important. And start booking partial profit. I already told you, you need to book 70% of your quantities at the first target. Okay. And target should be only 2% for the beginners. Don't be greedy. Don't expect more as a beginner. Stick to your targets and trade according to your risk appetite. When I say risk appetite, you need to be knowing your risk before entering the trade. I'm going to host another session to explain your risk appetite, maybe in next sessions. Okay. So if a breakout happens between 9:15 to 9:25, do not take up the trade. Okay. Because the market is more volatile during the start of the day. Okay. So if you miss an entry, don't worry. Market gives many entries on every single day. Do master this strategy. This is multi-time frame strategy. You can trade on any chart. Okay. This will save you a lot of time. Okay. So I can strongly say that there are a lot many people who just waste their time searching for the stocks for the next day, for the next trading day. I won't do that because for any given stock, I can do multi-time frame analysis, and I'll trust my levels, and I'll make an entry with all the 5 confirmations. If I'm getting confirmation from 5 or 4, if I'm getting 4 or 5 confirmations, then I'll be going for the trade. Okay. So that's how you should be trading. You should not waste your time selecting for the stocks. Okay. So you can do multi-time frame analysis for your favorite stocks, and you need to stick for them for the lifetime, and you can make money. Okay. I already backtested the strategy in front of you guys, and I have shown you that my target got hit many times. Okay. While explaining, I have shown you that. So if you miss an entry, don't worry. Market gives so many opportunities, and chart should be clean and neat. I seriously need this because chart should be very clean and neat while trading. Okay. And do not overtrade. You should be placing only 4 to 5 orders a day, not more than that. And do not force your trades. When I say forcing your trades, you should not miss out on your confirmations. Okay. Missing one confirmation is okay, but you should not be missing out on 2 or 3 confirmations. Do not force your trades or do not force your levels. Okay. And do not make your brokers rich by overtrading. If you take 10 or 20 trades a day, all your profits will be gone to your broker as brokerage. Okay. If you trade more, your broker will charge you more, and all your profits will be gone to the broker only. Okay. So don't overtrade and make them rich. Okay. Make yourself rich instead of making them rich. Work for yourself. So take less orders and quality orders. When I say quality, you need to look for all the confirmations and make an entry. Okay. So yes, we are at the end of the session, and I'm going to repeat all 5 confirmations once again, then wind up the session. Okay. So all 5, you need to, you need to look for 5 confirmations before making an entry. The first confirmation is breakout from a key level or rejection from the key level. Second confirmation is look for higher high formation or lower low formation, and colors of both the candles should be same color. When I say both candles are breakout candle and confirmation candle. Okay. And time frame should be 10 minutes strictly. Third confirmation is take confirmation from VWAP. If the candles are above VWAP, then it is suggesting you to go for a buy position. Go long. Okay. If you and look Fourth confirmation is you need to look for 35 moving average black line. Okay. So if the candles are above black line, that means you should be making only buy position. If the candles are below black line, if the candles are below VWAP and 35 moving average, then you should be making only sell position. If the candles are above 35 moving average and VWAP, you should be making only buy positions. Okay. These confirmations are important. And fifth confirmation is you need to be looking for volumes and 10 moving average on the volumes at the breakout and at the confirmation candle. So volume should be close to black line or more than 10 moving average at the breakout or near the confirmation candle. That tells that more than average number of buyers or sellers coming to the market depending upon the volume bar. Okay. So these confirmations are very important before making an entry. And the most important thing is, yes, the strategy is very powerful. I can strongly say that this strategy is very, very powerful. And if you master the strategy, you can, yes, you can be rich if you master the strategy. Trust, trust me. If you master the strategy, you can be rich. Just master this multi-time frame analysis strategy. You need to come from high time frame to lower time frame, and you need to be analyzing the market in all the time frames. You need to be drawing support, resistance, trend lines, and chart patterns in all the time frames, and you need to use different colors for different time frames. And yes, what else? It saves. I mean, you. I mean, it helps you to not to waste time searching for a watch list. Okay, you can select any random stock. You can do multi-time frame analysis and make an entries after breakouts using our all five confirmations. Okay, so trust me, this strategy is very powerful. It this strategy has the ability to make you rich. Okay, so don't give up on trading. Trade safe, you all. Okay, so I'm expecting that you guys are very clear with what is multi-time frame analysis and what is MTFA strategy and what are the five confirmations you need to look for. And yes, what should be your target, entries, and stop loss exits. Okay, so expecting that you guys are very clear with my explanation. And yes, if that's so, please like this video and subscribe to my YouTube channel. Okay, thank you guys. Thanks a lot. Trade safe, you all. Thank you. Bye bye.